Hello everyone, and welcome to this specialist trading presentation where today I'm going to be teaching you how to squeeze more profits out of each and every trade. Welcome, my name is Stephen Primo, the president and founder of Specialist Trading. And if you're not familiar with me or my website, we are an educational site where I take all of the tips, information, and strategies I've accumulated in my 38 years, and I pass them along to my students and to our members. I've been trading for 38 years. Once again, I started on the floor of the Pacific Stock Exchange where I was a specialist for 9 years. I traded through the crash and through the bull market that followed. And so I've seen and traded just about everything out there imaginable. I know what works. I know what doesn't work in terms of consistency. And today I'm going to be teaching you a very simple technique that will really extend your gains if you decide to use this tool. And the best thing about this is that most of you already have it in your possession. It's a simple tool that is most likely on your charting software package already. I'll just show you how to implement it, and you can start using this as early as today if you'd like. Okay, but before we begin, before we go into all the different ways in which to apply this, I ask that you please take a moment to view our disclaimer. I am going to be showing you a lot of performance results using this exiting technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So we are required to show you this, and as you're taking a brief moment to view it, I would also like to invite each and every one of you to follow us on Twitter if you haven't already. There is our handle at SPCLSTTRADG, obviously abbreviation for Specialist Trading. I post free information there on a daily basis. In fact, I posted a signal that our Forex members took just the other day, 2 days ago, to go long the dollar yen, which is already up over 200 pips. That's roughly $2,000 per contract. So a lot of great free information. I invite you to follow us. Now, if you want to learn more about what I teach about myself and also see some videos, then our sister site, which is Pro Trader Strategies, has put together a page for us on Facebook, a Facebook page. So there's the login info there. A lot more in-depth information as well on our Facebook account. All right, having said that, as I stated, I first started out on the floor of the exchange, and once again, I make no secret about how I struggled my first couple of years. My mentors were able to change my way of thinking, which ultimately changed my way of trading, and I was able to be consistent. That's what has sustained me for 38 years. So that's what my goal is at Specialist Trading. Even though we provide you with strategies and signals for that strategies, we are more about teaching you how to trade, not trading for you the way so many sites do nowadays, where they tell you where to buy, where to sell, where to exit. We just give you all the pieces of the puzzle and then let you decide, because it's our feeling, our philosophy that the only way you'll become a consistent trader is if you take control of your own trading. Too many traders are not taking control. In fact, they're doing the opposite. They're taking themselves out of the game and just relying on someone or something to tell them what to do. In my opinion, that's a recipe for disaster, and I say this from firsthand experience because that's the way I used to trade, and I didn't have anything to show for it for a couple of years. Ultimately, my mentors showed me what worked, what didn't work in terms of consistency. Once I just applied those things, I turned my way of trading around. So this is what my goal is, to teach you, not to trade for you, but to teach you how to trade with the specialist edge, the same edge that was taught to me. Now, since we are an educational company, this classroom will be held just as if we are in a particular class. So if you have any questions, kindly wait till the end of the presentation. I don't want to take any questions because many times we slow down the presentation, and often if you just wait for the next slide, you will see your questions answered. So if you happen to have any questions, please wait till the very end. The only question I will answer is the most popular one: is this being recording? Yes, it is. We are recording this right now. So if you are interested, if you have technical difficulty, or if you have to leave early, you can contact Pro Trader Strategies and they will issue a link to the presentation. Okay? All right, so why don't we begin? And I start out with a question for you. Has this ever happened to you? And I most likely feel it has, because the most common question I get from my students or for people that are interested in joining and becoming a member of our site is that, Steve, my problem is not so much the strategy, but it's really the, I get out too early and I leave a lot on the table. So let me show you these few examples here and see if this is, seems familiar in any way. We see here this chart in ADM. Okay, let's say your strategy generated a buy signal right here. All right, so you kind of wait around for a week or two. Nothing really much seems to happen, but you start to head upwards, and once you've gotten a good point or so, maybe a 3/4 of a point, you decide to get out. You're tying your money up for 2 or 3 weeks. You want to get out at least with a profit. And after all, you've always been taught you cannot get hurt with a profit. So you leave with a small profit after being in the trade for 2 or 3 weeks. And then the minute you get out, this happens, right? Look familiar to anybody? Or how about this? This can happen even if you go short, or even if you do have a good trade, as this example in Triple L. Let's say here you decided to go short and you have actually a nice profit here. You have about 4-point profit in a couple of weeks, so you decide to get out. This is the time where you feel maybe you're following someone in a chat room and they say you've hit support, or maybe your indicators or tools tell you that it's time to exit. You have some Fibonacci level where you should get out. So you exit, and lo and behold, that's when it really kicks in and the bottom falls out, and you got out a little bit too early and left about 4 or 5, maybe even 6 points on the table. Does this look familiar to anyone? What if there were a technique that you could apply that when you have these really nice trades which seem to keep going and going, could keep you in to squeeze as much profit and gains as you possibly could? Well, there is, because that's the question most people ask me. As I stated, how can I squeeze more profits out of every trade? Here is the technique, and it's very simple, and probably the thing that's most surprising is you have this capability already. Most likely you have this. This is nothing you have to purchase. We're not going to sell you this technique the way so many webinars do, where they get you excited and then they say, well, the only way to have this is by purchasing it and spending hundreds of dollars. No, we're going to give you this for free, and you can start using this as early as tomorrow. And all it is the RSI, Wilder's RSI, but what we're doing is we are editing. The standard default period of the RSI is usually set at 14. All you want to do is go into your edit box and change it to 5. Okay? So it's that simple. And now if you don't have the capability to do that, you should contact your tech support, whatever charting software you're using, and ask them to tell you how to edit it to a 5-period RSI. This is a very common setting we have at Specialist Trading, and most of our strategies that do apply the RSI apply a 5-period. All right, so how do we use this? Well, let's go back and look at those examples we talked about earlier. Let's take it step by step. If we look at the long scenario where we're purchasing ADM, as you see in the very bottom of this chart, we've applied the 5-period RSI, as we see right here. This is the blue line. Now, the top threshold is 70. The bottom threshold is 30. So that's what you want to have on your setting, okay? And you want to be able to track that. Now, what we're looking for when we're in a long position, we want to follow the RSI, and we want to wait and see once it goes above the 70 threshold. So we're not caring how low it goes. We're interested in how high it goes. So as you see here, we've purchased it somewhere around here based on our strategy. And remember, this can be applied to any strategy. It doesn't have to be one of mine. It doesn't have to be something that you've purchased by someone else. It could be something that you've put together on your own. It can be based off of news or the tides of the ocean. It absolutely does not matter what you're using to enter into the trade. But once you are in the trade, you have to start monitoring the 5-period RSI. Once again, this blue line right here. And what you want to see is the RSI go above the 70 threshold. And once it's above the 70 threshold, we begin to track it, as we see here, step by step. We track it, and as long as it's above the 70, we're okay. We're still in the trade. As you can see, we're doing fine now. Instead of selling somewhere around here, we're still in the trade. And now we see the RSI, the 5-period RSI, starting to head a little lower. And at this point, the RSI comes back down and closes below 70. Now it has to close below 70. Once it closes below 70, we want to find out the corresponding bar, which is right there. All right, this can be a 5-minute bar, a daily bar, weekly bar, it doesn't matter. I'll show you some more examples. In this case, we're looking at a daily bar. So the first close, not the first intra-bar trade below it, but the first close of the bar where the 5-period RSI closes back down below 70 after being above it, that's where we place our stop. Now this is a rather not expensive, inexpensive, or moderate price stock. Where you place your stop is entirely up to you. This is where you become a part of the process. This is not a system. This is not where you have to place it exactly one tick below. You can place it a half point below. You can place it a full point below. It's up to you. However you decide how much room you want to give yourself. The only suggestion I would make is that the smaller the time frame, or more moderate the time frame, or the less inexpensive of the stock or whatever you're trading, you don't have to have it that far away. But if you're trading a higher price stock, such as a $200 or $300 stock, or if you're trading intraday, I would give yourself a little bit more room, because those markets tend to have a little bit more noise, a little bit more volatility to them. So let's just say we place our stop just a little bit below. Okay, now we're either going to get stopped out at that particular stop, as we see right here where the red bar is, or price is going to continue higher. So we continue to track on a daily basis, bar by bar. And as we see here, the RSI goes back up above 70. All right, so we continue to track it, and price is going in our favor. Guess what? We're capturing some nice gains here, but we continue to leave our stop where it is, right here. We don't move it up yet until we see that the 5-period RSI here in blue starts to head back down lower again, and once again it closes below 70, which it does right here. And here is the corresponding bar. So what we do now is we don't sell at the market, we simply move this stop up to this bar now. Once again, giving us some room, which is totally up to you. Some of our students place it one tick below. Others like to give them some more room and place it a point or even 2 points below. It's up to them, depending on the price of the stock or whatever you're trading. All right, so we're either going to get stopped out here, or price will turn back up and go higher. So we continue to track the RSI, and the RSI went lower, but we're not stopped out yet. We track it more. Now guess what? The RSI has gone back up above 70. We continue to track it, and the RSI goes and closes back below 70. So here's the corresponding bar. We now move the stop from the previous level to just below here. All right, so you see how we're tracking it this entire way. Now we continue to track it on a bar basis, and we are stopped out on the very next bar. So that's the end of the trade. Now instead of exiting right here, roughly around 49, we were able to capture 3 or 4 more points by using this simple technique that you most likely already have. You just haven't been able to implement it yet. This is a technique I was taught on the floor of the exchange that has kept me in trades a lot longer if I choose to do so. Now I can take the standard exit and get out, or I can stay in the trade a lot longer if I have multiple lots, or if I have multiple shares, or if I really feel strongly about a particular trade. All right, let's look at the opposite side of the coin if we're going short, triple L. Let's say our strategy gave us a sell signal right here where this red down arrow is. In this case now, instead of using the 70 threshold, since we are short, we are only going to be concentrating with the 30 threshold. And so what we want to see, prior we saw price go above, and once it closed below 70, we placed our stop. In this case, we want to see price below, or I should say the RSI below 30, and then once it goes above, that's where we place our stop on top of that. So as you can see here, the RSI went below 30, and the first close back up above 30, we find the corresponding bar and we move our stop above here. Now this is a more expensive stock. It's a $100, $130 stock, so we want to give ourselves a little bit more room. All right, so we're either going to be stopped out at this level or price will head lower. So let's continue to monitor the RSI, and now the RSI went back down below 30. All right, so if it goes back up above 30 and closes, well, we will move our stop to that corresponding bar. And as you can see, the very next bar, it did. So we move this stop roughly to here. Okay, let's follow the RSI some more. And we're continuing to track it. We almost get stopped out. We're not stopped out yet. We are following the RSI. We keep our stop in place, and it's starting to drift a little bit lower, and at this point it goes below 30, but we continue to leave our stop in place until we close back up above 30. So now we just find the corresponding bar. We move this stop down to just above the corresponding bar. All right. So let's track the RSI again. Now we are back below 30. Once we go back above and close above 30, we will move our stop? Well, this is where volatility and movement starts to really kick in, and this is where you really start to squeeze some more gains because you've got a really nice trend in your favor now. We're still keeping our stop up here, and we will not move it until the RSI closes above 30. We continue to track it. It seems to have halted at these levels, gone down a little bit more, until finally it starts to firm up, and we have a close above 30 with this corresponding bar here. So we move this stop all the way down to above here, and we are stopped out on the very next trade. So now, instead of exiting somewhere here at roughly 122, we captured another 6-7 points by exiting down here. Once again, extremely simple technique that you probably have already in your capability to apply. You just haven't been taught how to use this yet. All right, so let's look at some more examples. Now that you know how to apply this, now you know how it works, we want to kind of get it sunk in because, you know, it's a different concept for most people. Most people use this tool in terms of overbought, oversold. We don't believe in those categories. We don't believe anything is ever overbought, oversold, but we can continue to use this tool in different aspects. You see how much more ability it will give us to stay in the trade a lot longer. So let's look at some more examples here. MOS, as we see coming in from February. Now this is an actual buy signal that was generated from one of our signals, strategies I should say, strategy number 4. So we entered long here, all right, and we just, if we really feel strongly we want to stay in the trade longer, well, we follow the RSI, it went up above 70. Remember, if we're long, we're only concerned where it is in relation to the 70 threshold. Remember, if you happen to have any questions, kindly wait till the end of the presentation. I'm not even going to open up the question and answer box, so I won't even see your questions right now. But once price is above 70 and then closes back below, well, we find the corresponding bar. Here's our initial stop. And as we see, we're either going to stop out there, which we never did, and we track the RSI, which goes back above 70. And at this point, it closed just barely below 70. So we find the corresponding bar and we move our stop up to here. So we've captured all of this, roughly another 4 or 5 points. And as we can see, we got stopped out a day or two later. Now many students will always report to me like, boy, Steve, I got stopped out, but it really didn't go down right off the bat. Well, you know, either you got out and maybe it has some more volatility to the upside left in it, or it may take a couple of days, maybe even weeks before the top hits, as in this case, as you can see later on. So in the first couple of days, it didn't seem like a very good place to exit, but ultimately later on, it kicked in. Now that's a long trade. Let's look at a short trade here at ARG. This was an actual signal generated by one of our strategies to go short. Now, we would always tell students, listen, if you have a nice profit and you want to get out, if you got short here, you could always exit the next day. I mean, you just captured roughly about 6 or 7 points. That's not a bad trade in just a couple of days. But let's say you felt extremely confident that this was going much lower. Well, you could, if you had multiple positions, you could exit a portion of your position at the first strong downward day. And then for the remaining part, you could just use this technique. So we are now below 30, and the first close we have back up above 30 is where you place your stop. All right, right here. And you are either going to get stopped out, which we almost did but didn't get stopped out, and you continue to track the RSI. Once the RSI goes back below 30, you wait for the first close above, and that's the next bar, so you would move this stop down to here. All right, you're either going to get stopped out or you can continue to track the RSI. Once again, we go below 30, and the very first close above is where you now move the stop here down to here. So if you had initially exited at this point roughly around 107, well, guess what? It's now roughly around 102. So you've captured an extra 5 points. And if you get stopped out, such as you did in this example, well, you just made an extra 5 points on the remainder of your position. Now, this not only works in daily bars. Let's say you have a long-term position in your IRA, or let's say you're trading a long-term portfolio and you just want to protect your profits. Okay, well, here's a monthly chart of Halliburton. As we see here, let's just say you're in this for the last 2 or 3 years. You've got a nice profit, but you're kind of scared that maybe the market's going to top. You're worried about what's going on in the world. So you want to use this technique to protect yourself. So here's how, as we see here, price is above 70. The first close that goes below it was right here. Even though we kind of just touched it, we didn't close below until right here. So here's your first stop. And remember, for longer term or for expensive stocks, you want to give yourself a little bit more room because there's a little bit more propensity for volatility and some noise. So you give yourself plenty of room here. It almost gets to that point of being stopped out, but you're still in the trade. So you leave this stop right here. You see how price in the RSI continues to be above 70 until right at this point we close once again below 70. So now this is where you move your stop from here to up here. So you've just captured roughly about 10 more points on a monthly basis. And now the RSI goes back up above. And at this point, which was September of last year, we closed below 70 once more. So this is where you now will move this stop up to here. Now you're capturing about 20 more points. Okay, so roughly when you first started this, the stock was roughly about 40. Now it's up to 65, 70. Okay, so you're either going to get stopped out or price will continue to go higher. So let's see what happened. Well, you would have been stopped out around 65 or so, and price went all the way back down to 35. So you locked in a very nice gain. You got out and you're waiting for another signal to get back in for your long-term investments. All right, so we looked at daily charts, we looked at monthly charts, we've been looking at stocks. How about the futures? All right, let's look at a daily chart of the E-mini, which is the future of the S&P 500. All right, we see here this was an actual buy signal generated by one of our strategies, strategy number 4, probably our most consistent strategy to date. So this was a signal that all of our members were able to take. And the very next day after going long this, look what happened. We had a really nice run up. Now, you could have exited, roughly right here for a nice $1,000 profit and gotten out rather quickly, just trading one contract. We would always tell people, sure, it is very positive to take a gain or profit. You can't get hurt that way. But let's just say you thought there was a lot more room. Well, if you were trading multiple contracts, you could have taken a quick $5,000 or $1,000 gain and then use this technique where you just track the RSI. And once we go above 70, well, you wait for price to close below 70, which it did right here. And this was just on the 20th, which was just, I believe, last week, a week ago today. So you would just simply place your stop there, and then you're either going to get stopped out or price will go higher. Well, you would have gotten stopped out the very next day, which was the 21st, last Thursday, and you would have captured a little bit more, probably about an extra $1,000 in your account. But it really didn't go down right off the bat, and so you may have been kicking yourselves. But remember what happened yesterday where the market fell out of bed? So it actually was a pretty good signal to get out. So you could have captured some more on a daily basis. But remember, we said this works in any market and any time frame. Let's look at a 3,000 tick bar chart. Now, I believe this was yesterday at the very end of the day when the market was going lower. And as we see here, this was roughly 8:30 Pacific time. The markets were heading lower. These were actual sell signals generated by strategy number 4, once again. Now, had you just stayed in the trade and used our standard exit, you could have gotten out here for a nice 2 or 3 point gain. But if you wanted to use this technique, well, you would have monitored the RSI, and once you went below 30, you would simply wait for the RSI to close above 30. So that's where you place your stop, and you pretty much would have locked in an extra 3 or more points on the E-mini future as opposed to getting out real quickly right here. Now another signal was generated, so now you're flat and you can get short at a higher level. So now you're short once again. You can monitor this. You see here's your first stop coming down lower. Here's your next stop, and so instead of taking a quick gain here, you could have tried to lock in some more, and it was a great idea because towards the end of the day, the market started to bounce, and you would have given everything back if you just used a standard stop of moving your stop to unchanged or something. So we looked at chick charts, and now we can apply this to daily charts of the currency futures. Now, in last year, or actually in January of this year, the Swiss franc, a lot of fundamental news came out and the restructuring of the economic basis, and so the Swiss franc just literally fell out of bed tremendously, a large amount as you see there at the end of January. What if you had purchased it right here, all right, as we see, and wanted to take advantage of maybe a little pop, a little bounce that was going to happen in the Swiss franc? Well, that would have been nice. You could have taken a nice quick advantage right here on this couple of days here. But what if you thought we were going to stay in a lot longer and really bounce much more? What if you could have locked in the majority of these gains, which went almost all the way back to where we previously were in the Swiss franc? Well, you just simply apply this RSI technique. Here's the 5-period RSI. We are above 70. The first time we close below, this is where we place our stop. So that's our initial stop. But we're not exiting until we get stopped out. We continue to track the RSI, and once it goes back above 70, we simply wait for it to close below, which it did. Oops, I'm sorry, I missed one more. And we continue to track it until we get to this point again, and now we're raising the stops one by one. And then lastly, which was in March, we had one last time where we closed below the 70 threshold. So we simply move our stop up here. So we've already captured all of this move. And we're either going to get stopped out or the Swiss franc is going higher. Well, we see here that we ultimately got stopped out, and it looks like a good exit point, and it actually turned out to be a really nice exit point because the gains most likely were dissipating and the Swiss franc started to go lower and lower. All right, so let's recap before we go into any questions or answers. We just shared with you how to squeeze more profits. Remember, it's up to you. You can use standard exit points that are in strategies or systems that you're currently using. But from time to time, I know a lot of traders feel and they have a really strong intuitive gut feeling that whatever they're trading is going to have a big move. And they don't know how to take advantage of that. Either the tools they've been taught don't really work well. Well, we just shared with you that all you have to do is apply a simple tool that most of you already have. That's the 5-period RSI. Now usually it's set at 14. All you want to do is go into your edit box of the indicator and change it to 5. Change it to 5. The threshold, the upper threshold will be 70. The lower will be 30. Now if you're long, you're only concerned with the upper 70 threshold. And you wait for price to go above 70 in the RSI. And then once the indicator closes below 70, you find the corresponding bar that it closed below 70 and you place your stop just below it. Where you place it below is entirely up to you. You have to become a part of the process. We're not going to tell you where to buy and where to sell. This is where you have to do your due diligence and research and find out what feels comfortable for you. Now, if you're short, you simply track the same tool, the 5-period RSI. This time, you're only concerned with the lower threshold, which is 30. So what you want to do is see the 5-period RSI indicator go below 30, and the first time it closes above 30, that's where you find the corresponding bar and place your stop just above it. Now this can work in any market, in any time frame, and as you just saw, in any direction. It's a great tool. One of the ways our students like to use this is with multiple contracts or multiple shares. So what you can do is exit at the standard exit point, and then for the remainder of your position, if you exited half of your position, well then you can use the remainder of your position using this technique if you really feel strongly. Once again, the best way to use this is if you have a really strong gut feeling that there's a lot more room left either to the upside if you're long or to the downside if you're short, okay? Now, here's the only problem. I give these free webinars on a weekly basis. Each week, since we're an educational company, we try to give all of our attendees something that they can start using as early as that day, such as we just did with you today. Here's the most common question I get. So, Steve, the reason why I'm attending your presentations is because the strategy that I'm currently trading or the one that I bought and spent thousands of dollars on doesn't work. It works terribly, so this tool couldn't help me. I need a strategy that has consistency, that can really work so that I can apply tools and all the things you give away for free. So what if you don't have a trading strategy? What if you want to apply a technique such as I just shared with you today, but you don't have a strategy, all right? What if you don't feel comfortable with the one you're using, you paid thousands of dollars for, and you haven't seen any profits yet? Well, here's what we have for you today. This is probably our most popular and our most consistent program to date. This is Specialist Trading's Dynamic Duo. And what it is we have put together 2 of our courses that have shown the highest levels of consistency. And when we put them together, you're even increasing your rate of consistency even more in any market or time frame. And what we do is we combine one of our best strategies in terms of consistency, which is strategy number 4, with our best short-term timing tool, which is the PET-D. Now let me just share with you some highlights about strategy number 4. It's for virtually all traders, from beginners to advanced. We have hedge fund traders who have been trading for a number of years, applying this strategy to their companies. We also have people who have been trading for maybe 30 days or 2 weeks that use the same rules. Now it's basically designed for traders looking to catch quick momentum moves. But you can apply this technique to stay in much longer, and I'll show you examples of how it works just as well. Its intensity level from 1 to 3 is a 2. In other words, if 1 is the most intense of all strategies you've ever traded where you have to be locked in front of your computer, and 3 is the most relaxing where you can just enter an order and leave, it falls right in the middle at 2. It only uses 1 indicator. That's all it uses. That's how basic it is. But you can apply this to any time frame, any direction, and any market. I've been using this in terms of my own personal trading for over 30 years because I was taught this on the floor of the exchange. It works in any market, trust me, any market or time frame. Our edge here is consistency. I'm not going to promise you that every trade works. In fact, I'll show you some examples of how we've had some small losing trades with strategy number 4, but we're really about 2 steps forward, 1 step back. If anyone promises you 100% winners, I would run because it's just, it's just not natural. It's just like someone saying, an athlete saying they're going to hit a home run every time they go up to bat, or every time they shoot the basket, they're going to make it. Even the best of all players fail every once in a while. It's the same way with strategies. We're more interested in a 2 step forward, 1 step back approach. So as you can see here, strategy number 4 has a very high level of consistency. But how can we increase our level of success even more? Well, we apply the PET-D. Now, the PET-D is an extremely simple but powerful short-term trend identifier. And how it does it is by painting the bars. And it doesn't repaint, in other words, recalculate once the bar is closed. Once the bar is closed, the bar stays the same color. So if you have a series of green bars, it's just simply telling you that the short-term trend is up. And if you have a series of red bars, the short-term trend is down. That's how simple it is, but I'm going to show you how powerful it is when we combine it with strategy number 4. So here's how we use it. If strategy number 4 generates a buy signal, then the PET-D must color it green. So the bar must be colored green. That's it. All right? Conversely, if strategy number 4 generates a sell signal, well, then the PET-D must color it red. That way you know that you have the consistency of the strategy, but you also have the consistency of knowing that you are in sync with the short-term trend. So once you combine these two things together, you really have increased your odds for success. And this is where we get to the point where we call this our dynamic duo, because we have so many people giving us testimonials on how well this has increased their trading and how well they've finally been able to become consistent. So let me show you some recent dynamic duo examples. Here's one in Amazon, okay? This was on the 20th of April, about a month ago. Now, as you see here, where the date is and the up arrow, we provide you with indications telling you when a signal has been generated. So even though we want to teach you this, for educational purposes, we provide you with indicators telling you when a signal is generated so you can check your work. After a while, you'll be able to identify a signal on your own. But on the 20th, a buy signal was generated in Amazon. Let's say you trade options. This is a rather expensive stock, and let's say well, I'm not sure I want to take this. How do I know this is going to be a valid signal, or I should say, how do I know it's going to be a profitable signal? Well, we apply the PET-D. Remember, buy signals need to be colored green, and once we apply the color bar tool, well, guess what? On 420, it was colored green. So this was telling you that this is a valid signal to go long. Either you want to buy options, you want to purchase the stock, it's up to you. And as we see here in the next week, the dynamic duo strategy 4 plus PET-D generated a 60-point gain in just 4 days. Now obviously news came out, but the dynamic duo detected a buy signal prior to the news even coming out in an announcement. So this is the beauty of putting these two things together. How about WYN? Now on the 27th of April, a sell signal was generated. How do we know to take this? Now, obviously, it's a valid signal. The red arrow identifies it as a valid signal to go short, but we want a little bit more confidence in taking this. Well, we just add the PET-D. Remember, sell signals need to be colored red, and it just gave you the confirmation. So it gives you the confirmation to take it, and the stock falls out of bed in the next 3 or 4 days. Now remember, we were looking at ADM and we applied the technique where you could have used what I taught you, how to stay in the trade much longer. Well, there's the exit up there. You could have taken that exit and stayed in much, much longer. And look at where we generated the buy signal on the 22nd of April. That was a valid strategy number 4 buy signal. But just to make sure, how would you have known to take that? Well, you simply add the PET D. Remember, buy signals need to be colored green. And in fact, all the bars were green. So showing you the consistency of the PET D. We also showed you triple L, how you could have taken advantage of using the technique I shared with you today on how to squeeze profits. And that sell signal was an actual sell signal generated by strategy number 4. So all of our course members would have seen that. But what about, just making sure you wanted to, be a little bit more confident? Well, all sell signals need to be colored red. So if we added the PET D, guess what? It colored that bar red, giving you the confidence to take this aggressive signal. Now, if we look at RAI, we see here that at the beginning of this month, there were 2 signals generated. All right, one on the very 1st of May, the other one on the 6th. Now, obviously, the first one didn't work out very well. It went up one day and then went right back down. And if you had a tight stop, you most likely would have been stopped out. So at this point, most traders are a little gun shy and they say, well, I'm not going to take the second signal because if I lose on that one, then I've got 2 losses in a row and I don't feel comfortable with that. So how could we have raised our level of confidence? Well, before we trade anything, we apply the PET D. Remember, buy signals need to be colored green. If they're not green, you don't take them. And we see here that now once we apply the PET D, the first signal was red. The PET D was not confirming that we were in a short-term uptrend. So you wouldn't have taken that first signal and you wouldn't have had a loss. But you would have taken the second one because it was colored green. And look what happened in the next week or so. Same thing with keeping you out of trades. As I've often stated, some of the best trades are the ones you don't take. Yahoo generated a buy signal on the 24th of April, about a month ago. Rather than just jump in and take it, if you apply the PET D, you want to make sure that it's green. And as we see here, the PET D colored it red. So what is this telling us? It's not confirming the signal, so we don't take it. The dynamic duo is not in sync. So we wouldn't have taken this trade, and therefore we wouldn't have had a large loss on our hands. So the PET D will not only verify and validate good trades, but it'll also keep you out of bad ones as well. Now, we see here in DLPH, a signal was generated on the 1st, but we want to verify it with the PET D, so we add the PET D, and guess what? It colored it green. So look what happened, okay? Now, you'll see this work in anything. Here's the ETF of gold, GLD. It basically just mirrors the price of gold. This was going back some time ago, but on the 5th, the very first week of January, the 5th of January, it generated a buy signal, strategy number 4. How would you have known to take this? Well, you simply add the PET D, and if the PET D colors that bar green, then it's giving you the confidence to take it, and you see that gold went up straight up in the next 2 or 3 weeks. Plus, you could have added that technique I just shared with you if you really felt strongly about gold taking off. This can also work in commodities. Here's a chart in soybeans last month. Okay, we see here that a valid sell signal was generated using strategy number 4, and it colored it red. So you had the confidence to take the trade, and soybeans went lower the next couple of weeks. Heating oil. Okay, heating oil has been going higher. 2 valid buy signals were generated, one on the 6th of April, another one on the 22nd. They were both colored green by the PET D, giving you the confidence to buy both times. We can also apply this to intraday trading. 60-minute chart of the E-mini, all right? The first sell, as you see here on the left, was colored red. It's a valid sell signal. Remember, the strategy will automatically generate up and down indicators telling you when to buy, when to sell. But the PET D has to also be applied to confirm it. So the sell signal was confirmed because the PET D colored it red. So in a couple of hours here on this hourly chart of the E-mini, you could have captured roughly about 15, maybe even 20 points on this particular sell. All right, that would have generated anywhere from $750 to $1,000 per contract. Now, a day or two later, a buy signal was generated, as you see. Once again, that will show up on your charting software as a little arrow or dot telling you that a valid strategy number 4 signal has been generated. But you also have to apply the PET D. The PET D colored it green, And guess what? The E-mini went up roughly about 20 points or $1,000 per contract on an hourly basis. Now here's a 10-minute chart of the E-mini. This was on the 18th, last Monday. A buy signal was generated on a 10-minute time frame, and the PET D colored it green. So you would have purchased it roughly around 21.19, and the stock went up roughly, or I should say the E-mini went up roughly 10 points or $500 in the next 3 or 4 hours. Now let me just show you what happened this morning, because we're not trying to cherry pick, we're trying to show you the consistency of these two techniques here. This morning on a 2500 tick bar chart, this was at 6:30 Pacific time, since we're on the West Coast, all right? A valid signal to go long was generated using strategy number 4, all right? Depending on what charting software you have, you'll either have an up arrow, an up green arrow, or a little green dot telling you that a buy signal was generated, all right? But remember, if you want that higher level of consistency, you simply just have to add the PET D. Buy signals need to be colored green. So if we add the PET D, guess what? It was green. So you would have gone long, and as you can see, in the first half hour, you could have made a nice quick 5 or 6 points just using this simple dynamic duo. Now this is on the E-mini. We showed you tick bar charts. Here's the British pound signal that was generated to go long on the 5th that captured hundreds of pips. And if we want to go on a weekly time frame, we can see the Australian dollar. All of these signals were strategy number 4, and they were all verified by applying the PET D because they were red. So if the question comes up where you say, boy, Steve, I love these free tips and techniques you share with us each and every week, I just don't have a strategy or a method to apply it to, well, here's your chance to take advantage of our special dynamic duo. Okay, we're having an attendee discount special where we're providing both of these for you. The Primo strategy number 4 along with the PET D, and you're going to get instant quartz access. Detailed instruction, 5 videos. We're going to teach you all the entries, exits, and stops. You're also going to get these add-ons, which will signify and identify buy and sell signals that strategy 4 generates, and it will also color the bars for you. Now, if you're still not convinced yet, let me just share with you what happened this past week. All right. Now, the LA Times came out with breaking news on the 26th, if you see circled here. This was just yesterday. Charter Communications buys Time Warner Cable in $55 billion deal. All right. It was reported on the 26th, 7:30 a.m., which was yesterday. Charter Communications has reeled in its big prize, agreeing to purchase Time Warner Cable in a blockbuster deal that would make it the largest pay TV provider in Southern California. The shares rose 8% off that news. So if we look at the chart here, that's when the news came out on the 26th, okay, 7:30 a.m., and the stock obviously gapped up higher. Here's the interesting thing about our dynamic duo. If we look back on our signal service, which is provided for people in the course, we see here that we generated a signal to buy Time Warner Cable on the 15th. What strategy was it? Strategy number 4. Now, if we see here, that's when the signal was generated, all the way back a full week or two before the news came out, before anything happened. In fact, prior to that, the stock was just basically going sideways. But let's just say you still were a little worried about purchasing a $155 stock. Say there was too much information out there. If the deal didn't go through, you were scared. Well, you want a little bit more confidence, right? The way to do that is by applying the PET D. And guess what? Up until that day, all of the bars were red, telling you that the short-term trend was down. But on the day the signal was generated, PET D colored the bar green. Remember, the PET D is totally independent from strategy number 4. They are not configured and based off of the same parameters. One is based off of momentum. The other one is a strategy based off of a pattern. They're totally different techniques altogether. But when you combine them, they form tremendous synchronicity, which really increases your odds for success. So had you taken advantage of that, well, guess what? Strategy number 4 and the PET D dynamic duo would have generated a 30-point gain in just 7 days. All right. So these are actual things happening within the last week. We're not just cherry picking the best scenarios in the last month or two, the way a lot of webinars do that you see online. So once again, we are offering you this, the attendee discount special, for joining us today and for being a part of our weekly webinars. Remember, you get all of this the add-ons, the signal alerts, the entries, exits, and stops. Also, you have access to my personal email because now you are a full-fledged student of mine, and it's more like a mentorship. You can contact me whenever you like. So all of this is included. Now, Pro Trader Strategies, that's my sister site where they market and promote all of my courses. They have these programs listed separately on their site for close to $3,200. Okay, that's the price you would pay without the discount. We're dropping that price nearly 25% today, down to $24.95, and we are also offering payment plans. So we realize a lot of you cannot come up with that lump sum of $24.95. Don't worry, you can contact Pro Trader Strategy, and for a small deposit, you can be up and running and have immediate access. But this is for a limited time only. So here's the information and how to contact us. Pro Trader Strategies, once again, they handle all of the promotion of my courses and my methods. You can email them at trading@protraderstrategies.com, or you can call them directly at area code 310-598-6677, and that's how you can put together that little payment plan so that you can be up and running as soon as possible. Now, the link at the very bottom is where you will go to just sign up automatically and get that deep discount where you can be up and running as soon as possible. Remember, once you sign up for these courses, you are a full-fledged member of mine for life. This is not something where you're a member for 2 or 3 months and then that's it, you're on your own. You can always email me, ask me questions about anything. It doesn't have to be one of our strategies. It could be an idea you're thinking of or something you heard of, and I'll give you my feedback since I've been trading roughly 40 years now, and I'll tell you if there has a level of consistency to it or not. Now, once again, that link that you see at the very bottom is not live. You're going to have to copy and paste that onto your browser. But if you look in your chat box, I believe they've posted the link for you there, which is live. Just simply have to scroll up, and you'll see the link up there. It's towards the top of the chat box there. Just simply click that on, and it will automatically take you there. All right, now I'm going to leave this information up and answer any question you may have. I know a lot of you have been waiting, and I want to thank you for waiting on any questions. Let me open up the question and answer box, and let's see what some people here. Anna asks, what time frame would you use it on? 15-minute, 5-minute? Well, remember, Anna, this is my standard answer for that. The best time frame is the one that best suits your own needs. Everyone comes to the market with different scenario. In other words, I can only trade a certain time frame because I'm giving webinars such as this, I'm teaching, I'm putting together presentations. So I have to trade small time frames such as tick charts and intraday charts because I only have a small allotted amount of time. But that's because of my schedule. Now, if I didn't do this, I would maybe trade higher time frames. So it all depends. Everyone comes to the markets with a different environment. So there's no one right or wrong time frame. It's the one that best suits your needs. We have students who use this dynamic duo on daily bars only and swear by it. We have others who use it on tick charts only and swear by it. There's no right or wrong answer. It's only what makes you feel the most comfortable, okay? Gunter is asking, could you post the Twitter link? You know, Gunter, I'll just repeat that. If you didn't get that, I don't want to backtrack all the way back. It is at SPCLSTTRADG. In fact, let me, if I could actually put that there. SPCLSTTRADG. And that is the abbreviation for specialist trading, and that is basically what we're, you know, if you need to follow us on Twitter. But remember, we will only show you things after the fact. It wouldn't be fair to tell you where to buy or where to sell a particular, you know, currency pair or a stock or a future, because it's not fair to the people that are part of the program already. Okay. Linus asks, is it possible to use the technique for scalping FX 1-minute chart? Sure. The only thing I would suggest is remember the smaller time frame you go to give yourself more room because of the noise and because of the volatility. But yeah, we have people that use this on tick charts, on the FX, on minute charts, on daily, weekly bars. It works in any market and or any time frame. Okay, let me see here. Let me try to backtrack. Excuse me if I missed a couple of questions. Any reason for 5 and not 7, 10, or 12? I believe you're asking about the RSI. the question is, any reason for the 5 period? Yes, it's just been my experience in nearly 40 years that the 5 is a really good setting that works well in all markets and all time frames. Remember, we want to keep things as simple as possible. And if we had to change a particular indicator for every market or for every time frame, it would just be too complicated. So all we're trying to do is make sure that we have things as basic and simple as possible and that fit all market and all time frames. So the 5 period, in my experience, seems to work the best. Okay, for not in terms of always generating 100% trades, but just for having the most consistency. Okay. Question from Dennis: what if on a long the RSI never goes above 70, thus not creating a second higher stop, and then it just goes down to our initial stop? Well, then the question is being, what if we never get that extra higher move? Well, then you're just using your initial stop. Okay, it just didn't work out. In other words, remember I stated that this is only a technique that should be used if you have a real strong gut feeling that you think there's a big move in play. And most traders come up to me and say, boy, Steve, I always leave too much money on the table. Well, if you are a trader who wants to try and capture as much as possible, well, then go ahead and apply this technique. This is just a technique for those traders who feel they're always leaving too much on the table. If you feel comfortable with the method you have and it's currently generating some nice profits for you, well, then just use that standard exit. But the way to be the best of both worlds is to have multiple shares or multiple lots, exit a portion at the standard exit or the first initial exit, and then leave the remaining in either to be stopped out with a loss or to really take advantage of these large gains. Okay. Also, Dennis asks about the PET D. Can it be said that it is not only a short-term trend indicator, but also a momentum indicator, meaning it stays green for long, means there is still momentum in the trend? Yes, Dennis. We in the PET D course, which if you take advantage of this dynamic duo special, in the PET D course, we also give you 4 different techniques for trading with the PET D. We also share with you a stop technique for using the PET D. There's a lot of information and a lot of ways to use the PET D, but please remember, the only thing I just want to make sure that people understand is the PET D is not a system, it's not a trading strategy, it is proprietary, meaning we don't share the formula with people. It's very simple and basic, it's based off momentum, but we want to keep it in-house at this point. We teach you strategies, we share all the rules, techniques, which I give on a weekly basis, but the PET D, we're keeping it in-house proprietary for right now. Because we feel it's that valuable. We don't just want someone to reverse engineer it and then give it away. So it has many uses, but it is not a trading strategy. It doesn't come with entry points, exit points. It's simply a great trend identifier as well as a strategy confirmation technique. Okay. Let's see. HO gave a buy signal, then the bar charts went red. How do you know when to stay in? Well, remember, the buy signal, I think what you're misunderstanding, Steve, is you just want to confirm that buy signal. Once it's been confirmed, that's fine, okay? You're only concerned with the entry. So once we are in the trade, don't be so concerned with the PET D. That's not this particular technique. So even if all the bars were red after that, that's still okay. We've seen trades that work out. All we want to know is that when that specific pattern, when all the pieces of the puzzle came together and generated a buy signal through the strategy, we want to make sure that the PET D on that same bar was confirming it. What happens afterwards is not so much of our concern, okay? So don't worry about what happens after that, okay? People are asking about the price again. The price is usually listed at $3,200 roughly. We're dropping it down to, let me just backtrack here. I believe the price, yes, there it is. The discounted price is now set roughly about 25% lower at $24.95. Remember, this is for a limited time only, a day or two usually, and then it goes right back up to roughly $3,200. And as well, this is not something that expires after 6 months and then you have to, repay again as a subscription base. This is yours for life. So you will always have strategy for, and you will always have the PET D. Now, one thing I just want to make sure that you all understand, a lot of people are always asking, what platforms does the PET-D work on? Okay, let me just share, and Strategy 4 as well, where you get the automatic add-ons attached. You can apply it to TradeStation, Metastock, MT4, NinjaTrader, Sierra Charts, and Thinkorswim. But there's just a few small edits you have to make with Thinkorswim, but we walk you through that process. Okay, so those are the major charting software packages you can apply it with. Let me sweep down here to some more questions. Doreen asks, will you be emailing us the recording of the webinar? Yes, we most likely will, Doreen, but you know what? Just take down that phone number or that email address right there in front of you for trading, for Pro Trader Strategies, I should say. And just in case you don't get it, email them and they should send it to you, okay? Let's see. Dennis says, thank you. You're more than welcome, Dennis. And Rob asks, what plots on the charts exactly with the PET-D? Well, with the PET-D, remember, all it does is change the color of the bar. Each and every bar will have a color. It will either be green or it will be red. Green is just signifying that we are in a short-term uptrend, according to that particular formula for that closed bar. Once the bar closes, it will not recolor the bar. So don't worry, it will not reformulate and then turn red as the day progresses. It won't do that. It will stay at the bar where it was when it closes. Now we show you a number of ways in these courses in which to apply it. So you don't have to worry about that all bars are all green and all bars are all red. There's numbers of ways in which to apply it, such as a confirmation tool, such as stop placement. Even we have some entry techniques using it. So it's a great course in and of itself. You're getting it at a great discount, okay? If this is too expensive for you, remember, we have payment plans. That's the one thing where a lot of people still forget. You can come in with a relatively small payment and still be up and running as soon as possible. So don't worry about that. You can contact and put together some type of payment plan with the people at Pro Trader Strategies, so you don't have to come up with that amount. But think to yourself, we've just shown you things in the last month. We've shown you things that have happened within the last couple of days. We showed you a 30-point gain in Time Warner Cable. We showed you a 60-point gain in Amazon. I showed you 5 or 6 points just this morning in the E-mini. So regardless of what market you trade, I don't think you can afford not to take advantage of this discount. We're not cherry picking things that happened a year ago. This just happened within the last few hours. So it shows you the consistency of this technique. On top of that, you have a mentor, someone who's been trading for 38 years, who is there with you every step of the way. He'll be trading right alongside with you. So I don't think you can get that with a lot of other packages. If you're still not sure, remember, do a Google search on us, see the testimonials, go to the different blog sites and see how people are really happy about what we're doing. And there's not a lot of complaints with us, okay? So in closing, I want to thank you all. Remember, if you're going to take advantage, if you really want to take your trading to the next level, take advantage of that deep discount, because it's only going to last for the next couple of days, and then we'll talk about another promotion we have, and you'll miss it entirely. And if you're interested, you won't have a payment plan, nor will you have the discount, but we're offering that today, okay? So here's the information you need in front of you for ProTraderStrategies.com. You can email them. Best thing would be to call them directly so you can talk to one of their trading consultants and they can put together a trading plan for you and you can be up and running ASAP. In closing, I want to say thank you so much for attending today. I really hope that the technique I shared with you, that I taught you on how to squeeze as much profit as possible, comes into play with you. If you can apply it, you can start using it as early as today. But please watch the video if you get the recording, just so that you can make sure you totally understand it and don't implement it incorrectly. Thank you so much. Take one last look at our disclaimer before we leave. I want to thank you all for attending today. I hope you take advantage of that deep discounted offer, and I look forward to all of you becoming members of mine at Specialist Trading. Thank you so much. I will see you next time. Bye-bye.